U.S. stocks may be emerging from their bottom, and the dollar retreats as the euro rises. You're watching the Daily Brief with Forbes. I'm Ramia Faraj. There is now cautious optimism that stock markets are showing signs of bottoming. The sentiment comes as U.S. stocks surged as more companies reported better than expected earnings. It offered some respite to investors worried about higher inflation denting corporate results. The Dow gained nearly 2.5%, the S&P added 2.75%, and the Nasdaq finished up more than 3%. Analysts say the real test will be when big tech companies announce earnings. Shares of Microsoft, Alphabet, and Apple posted big gains, and all are set to report earnings next week. The U.S. dollar retreated this morning as the euro extended its overnight gains on relief Europe might be able to avoid energy shortages and on the chance the European Central Bank may deliver an aggressive rate hike tomorrow. Russian gas flows via the Nord Stream 1 pipeline are anticipated to restart on time tomorrow after the completion of scheduled maintenance. The euro was up nearly 0.2% in early trade to over $1.02, having posted its strongest daily gain in a month of 0.75% overnight. Netflix lost 970,000 subscribers last quarter, which is actually good news considering it shocked Wall Street in April when it said it expected to lose 2 million. Netflix avoided that worst-case scenario and is predicting a return to customer growth this quarter. As a result, Netflix shares, which have fallen 67%, rose in after-hours trading. After years of red-hot growth, its fortunes changed as rivals including Disney, Warner Bros. Discovery, and Apple invested heavily in their own streaming services. Volvo Cars saw higher second quarter profits, but said it expected full-year retail deliveries to be lower or on par with 2021. The Sweden-based carmaker's quarterly operating profit rose to $1.06 billion from $470 million a year ago. Accounting effects from the listing of high-performance automaker Polestar gave a boost. Twitter will get an October trial in its legal fight to hold Elon Musk to his $44 billion takeover offer after a Delaware judge said it deserved a quick resolution. Musk's efforts to delay Twitter's trial against him flopped in what's seen as a major victory for Twitter. Musk was pushing for a February trial to allow for an extensive investigation into fake Twitter accounts. Twitter says the issue is a distraction and an excuse to walk away from the deal. Closer to home, Moody's has downgraded the long-term foreign and local currency issuer ratings and the foreign currency senior unsecured ratings of the government of Sharjah to Ba1 from Baa3. It's also changed its outlook to stable from negative. The downgrade to Ba1 is driven by Moody's expectation of further significant deterioration in Sharjah's fiscal strength over the next few years and the absence of a credible fiscal adjustment plan that would stop and eventually reverse the upward trend in the Emirates' debt burden. China is reportedly preparing to fine ride-hailing giant Didi $1 billion over its cybersecurity practices, boosting investor hopes China's tech crackdown is winding down. Didi, once known as China's answer to Uber, has been one of the highest-profile targets of the widespread clampdown on the sector, which saw years of runaway growth and supersized monopolies before regulators stepped in. Once the fine is announced, the government is expected to ease its restrictions on Didi's operations after regulators removed its apps from online stores. Importers of technology products from China paid over $32 billion of tariffs imposed by President Trump between mid-2018 and end 2021. A Consumer Technology Association report was revealed as the Biden administration deliberates removing some duties as a way to give American consumers relief from high inflation. The report shows the tech industry has reduced its dependence on China in the wake of the tariffs, but this has been offset by increased imports from Vietnam, Taiwan, South Korea, Malaysia, and other countries. Luxury shoemaker Manolo Blahnik has won its 22-year legal battle in China over a trademark dispute. The dispute started when a competitor started calling itself Manolo and Blahnik in 1999. The British company, named after the company's founder and creative director, filed suit with the Chinese authorities in 2000. The case has only now been resolved by the Supreme People's Court of China. I'm Ramia Faraj. This is the Daily Brief. Thanks for watching. Bye for now.